So it's day 15 of the government shutdown, and one of the keys to ending it may be pressure on air traffic controllers. We're already seeing flight delays because of the shutdown, and yesterday was their last paycheck, and it was only 70% of their normal pay. Their next paycheck is supposed to be due October 28th, but that will be the first one fully missed unless there is a resolution. Now, once flights start getting delayed further or canceled altogether, as many of these workers are not going to work for free, pressure will really start to mount, and this could be something that could cause people on both sides to come to the table, especially with the holiday season right around the corner. This morning, stocks were rebounding higher and mortgage bonds were trading near unchanged levels. The 10-year was down 2 basis points at 4%, but it has since budged a little bit higher and is now trading around 4.04. This is a modest rise, and it could reflect investor caution amid persistent trade tensions and delayed economic data releases due to the ongoing government shutdown. Meanwhile, the 2-year yield is grappling with resistance near 3.5%, a level that continues to cap short-end momentum. The NFIB Small Businesses Optimism Index for September showed that confidence dropped. Companies expecting the economy to improve fell 11 points, while those expecting higher sales fell 4 points. Plans to hire rose 1 point, but remains at weak levels as only 60% of the companies that were interviewed plan on hiring. This could also be due to the holidays coming ahead, guys. So the Mortgage Bankers Association released their mortgage application data for last week, showing that purchases volume fell 3%, but is up 20% year over year. Refinances fell 1%, but are up 59% year over year. Rates were unchanged last week, but have since moved a little bit lower, which should result in a rise in application volume in the next report. The MBS Highway National Housing Index was flat at 27 in October of 2025, showing no month-over-month change after a recent 3-point increase from September. Because seasonally we normally see a decline during this time of year, it was something positive to see that it remained stable, although it's still much lower than this time last year when the index was at 40. This stability comes as buyer activity remains low and down from a year ago. Well, that is it for today. Thank you guys for tuning in, and don't forget to hit subscribe, like, and share so you don't miss any of my weekly